Welcome back. You're still tuned into Midcap Radar. Well, Crompton is on our radar, reported an inline set of numbers in Q3. With respect to analyst expectations, electrical consumer durables growth was driven by strong performance in pumps and BEE transition. Let's welcome Kaleeswaran Arunachalam, who's the Group CFO and Head of Strategy at Crompton Greaves Consumer Electricals. Mr. Arunachalam, thank you so much for joining in. Good afternoon. I wanted to get a sense of the demand trends right now. Last 2 quarters were challenging for the industry overall, but we did see festive season, GST cuts. Do you think that has converted meaningfully into better demand? What is the outlook for Q4 and the upcoming summer season as well?
Hey, good afternoon. I think to start with, we could see some of the GST benefits already yielding to demand picking up. If I have to give you a specific category like pressure cooker, which is part of our butterfly business, you saw the GST coming down from 12 to 5%, and we have seen almost a 40% growth on that business. So that's very positive. One of the major things that we have to complete for Q3 is getting compliant with BEE. So 70% of our portfolio migrated successfully into it. Not only migrated, some of our investment that we have done on technology long time back helped to ensure that the cost is also mitigated. So overall, it's been a great quarter from that perspective across all segments, and even margins have started to moving up in the right direction. Looking forward, Q4 is our biggest season. Initial trends are positive. We would see that it continues. Category after category, we are seeing that momentum coming in. Butterfly continues to do well. We expect the kitchen category overall to grow at about, say, 15% in the next 2 to 3 years. And Q4 also seems to be in the right direction. Fans and air coolers, largely a summer-driven business. Demand starts from, say, third week of February is when we see the pickup happening, and then it goes up to April. Initial trends are pretty positive in those segments also.
Okay, Mr. Arunachalam, FY26, especially for the cooling segment, even fans was impacted on the back of longer than expected monsoon, as well as very strong winter season. So FY27 on this slightly subdued base, what are the kind of initial estimates you're giving? Can you quantify the guidance in terms of top line margins, PAT, as well as the market share that you expect to maintain?
Yeah, see, I'll start from the later. I think one of the important metrics that we measure ourselves in the organization is market share. I'm first very glad to share with you that as we speak, even for FY26, our market share is moving up northwards across all categories. That's a very positive trend. So irrespective of where the industry goes, we are able to do things right and work towards consumer-oriented insights, helping us to win, even when the season is not in our favor. Moving on that direction, we would expect our business, while we don't give a near-term guidance, to grow at mid-teens, which is doubling our business in the next 5 years is what we're looking at. Aided to that, even FY27, we don't see anything to be different from that. Considering the revenue growth coming in, one of the things that we will continue to do is invest behind the brand. As an organization, we also talked about why is it important for us to be consumer-centric and get technology that backs that. So we launched Tech with Heart about, say, 1 year back. Today, even in fans, we have moved towards a platform-based organization rather than multi-SKUs at multiple places. It is giving us scale. It is also giving us an opportunity to improve durability and reliability of our products, which is also making us win with the consumer. A segment like BLDC, we are now seeing significant growth in the last 3 quarters. And you will probably get to hear about new product launches also that will happen in March, which will help us to deliver stronger growth in FY27 also.
Take that point. So, one of the segments that did well this time was solar pumps, which recorded 2 times growth on a YOY basis. You now are at 200 crore rupees in terms of solar pumps revenues in FY25. What will this number look like in FY26, FY27? The entire solar category, how bullish are you on this? And also, aren't you seeing a lot of competition here? Because a lot of companies are venturing into this one.
See, I'm happy to state to you that while we entered, whenever we enter a category, we enter for leadership. We started with fans. Today, we are not only India's #1, we are world's #1 in fans. The same is replicated in geysers. You can take in residential pumps. Now we are a top 3 player in kitchen and so on and so forth. Even when we got into solar, there were 2 hypotheses on which we entered. One, we believe, considering the momentum that has been created by PM Kusum, the entire agri segment for pumps will move towards solar in the next 3 to 5 years. So we wanted to be ahead of the curve, get our library created, and we become a brand of choice for the farmers. That has really given us the momentum on driving this growth. Today, arguably, we are probably a top 3 player in solar pumps also. Solar pumps plus solar rooftop, we think there are a lot of back-end synergies that can also obtain when you don't scale the business on a linear basis, but you jump frog the growth. which is why we are bullish and we are looking at these two business combined to be about 1,500 crores in the next 2 years. This will give us scale. This will give us cost synergies across various sourcing components that we buy from. It will also give us an opportunity to win with the consumer ahead of time.
Okay, Mr. Arunachalam, you've announced a foray into the wires and cable segment. While there is no doubt that the TAM over there is quite large, it's also a pretty competitively intense sector. Analysts are speaking about margin dilution from this particular space. Your thoughts, and what is the kind of targets you've kept for yourself over there?
See, any category we enter, first we are very clear on unit economics. Categories that don't make sense for us in unit economics, we don't enter only, because everything is attractive, everything has got a tailwind, but it doesn't make commercial sense, we don't enter. When we talk about wires, we see there are 2-3 things that plays to our favor. We have got a brand that is very, very strong, and our market share in some of the markets are maybe at upwards of 40-50% in fans. Backed on that, there is a lot of strength in go-to-market also, which is also helping us to see which categories can ride on the same go-to-market and help us to scale up over a period of time. As I already talked about, we also understand what are the consumer issues that we have in a category like wires that is not yet addressed. So we are coming out with a meaningful value proposition which addresses a real consumer need in wires, and cautiously we would be scaling this up. Capital allocation has been one of the strengths of Crompton, where we disciplinedly put money behind segments where we know that there is growth opportunities. At the same point of time, it doesn't dilute our ROCE or margins. 3 years back, when we entered into solar, one of the biggest questions that came in is, will it dilute the margins? Will it get the ROCE down? I'm glad to say that it has not gone that path. We will be disciplined on that. And we will go with the value proposition that is more consumer-oriented rather than a me-too product.
Okay. Take that point now, Mr. Arunachalam. The street definitely likes your numbers, up 6%, and the commentary is quite bullish as well. Most of the categories to grow 10 to 15% for the next 2 to 3 years. That's the word coming in from Crompton Consumer. Thank you so much for joining in today and giving us your thoughts on the outlook going forward. At the day's high, after the management interview, that's the commentary from Crompton Greaves Consumer Electricals. Slip into a break. Up next, we'll get you more on the markets and stock-specific action.